weekend analysis and review. So this is the second week of July. Last week was was filled with very beautiful price action. A lot of trades across the five trading days. So I wasn't really involved in the market. I wasn't really involved. Why? Because I didn't have a real account to trade with, so there was no need going to a demo account and trying to do anything there. I didn't have a real account, so I was just in and out, just looking at the price action. If I see something that looks okay, I'll just try to put it on my demo when I have the time. But going forward now, I just funded my live account. It's not that much. It's just $12. I'll be funding more as time goes on. So I'm actually working. I work my job. I work in a company. So as they're paying me, I'll be funding the accounts. I'm an intern, so they don't pay me that much. So for what they pay me, I make all my expenses, my transport expenses, and then I also fund my account. So I'll be funding that progressively every month. I think that's better than trading anything demo. So when you win, you win something, you can withdraw that and have your account. You can buy something with that, and when you lose, you lost. So for that reason, I'll be going live. So I'll be very much involved in the market. Any day that I'm chanced, any day I'm chanced, I'll be very much involved in the market. So with that being said, let's move on to the analysis. So this is still the first month of the quarter. So this is the second week of the new quarter. I'm still keeping tabs on the quarterly time frame. So for me, overall, the quarterly time frame, I'm still short. I still have my short bias on the quarterly time frame. Why? The main reason why I'm going short is because looking at this candle, you can see this big ass candle here. Okay, and you can see this one. So I'm measuring the size, not with the wick combined with the body. I'm just using the bodies only. The wicks doesn't matter to me. It's just where price dipped out to and then came back. So look at this candle body, like it's like three times of this candle. But then if you look at this volume indicator here, you can see that the volume in this candle is bigger than the volume in this candle. So that means as we are running up in this candle, we are losing volume, and then this candle came spiked into this high where this candle where this previous quarterly time frames, previous quarterly candles couldn't stick out, spiked into that high also, and then closed bearish with more volume and a tiny body, a much smaller body than the previous one. So now we're about, if you can look at the bodies, you have one drive, two drive, three drives going higher, and then if you look at the wicks, you have one drive, two drive, three drives coming lower. So we are like having a divergence between the wick and the bodies of the candles. So the wicks are making lower high, lower high, lower high, while the bodies are making high, 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 high. So with that being said, I believe that in I also explained this in my last weekly updates. So I also explained this using this particular candle here, because this where the volume in all these movements here died. This was actually in 2020 October. So all the volume that we've been accumulating from here, going up, going up, going up, going up. In this particular candle, money was pulled out. Okay, and since then gold have been consolidating on a much larger scale. So you can see we've been in and out, in and out, in and out of this area. So we are now at the high of this area, and you can see what has been happening. Once we get to the high, we dump back below. Once we get to the high, we dump back below. So now we are at the high of this candle now, of this volume candle, and we spike to through the high, spike through, close back in. So I believe that's for the coming few quarters, we can at least, okay, we can at least test the midpoint of this. Okay, we can at least test the midpoint of it. And if we test the midpoint and break closing below that midpoint, you can see gold coming down 1765. Then if you start breaking 70 to 65, closing below 70 to 65, one candle, two candle, three candle, then it's game over, bro. Gold is going to come down to 1370s. Okay, 1370s, 1350s. So with that being said, I'm still bearish on the overall time frame, the quarterly time frame. So if you can remove that and go to the let's go into the monthly time frame. So okay, monthly time frame, you can also see that we spiked one, spiked two, spiked three, broke close below the borders of this last up close candle here. We couldn't close below the week, and then the next following months we broke below this week and this week. Okay, close below those 2 weeks now. Now, what I'm suggesting on the monthly time frame, if I can bring this to here, you can map out that whole monthly candle from high to low. We can test the midpoint of this candle. Just retest the midpoint and start to roll over on gold. What else I can suggest is that if you look at this previous moose candle, this just mark out that low there. Okay, that low. We just broke beneath that low. Okay, close body week, close everything close below that week. So now we have retested. Okay, we have retested that week, and now after this retest, we can take it that after this break retest, we can start to move on gold again. That's for the monthly. Anything else you can suggest here? Boom boom. So what I can also see is this big candle here, this big candle having less volume than this. Okay, having less volume, which is suggesting that this following month, this follow up month, can at least make a much bigger retracement, so you can beat the midpoint. So this kind of closing here with bigger bodies but low volume than this is showing me that the next what it's trying to tell me is that the next candle won't be won't have more volume to the downside. Okay, it can still happen, but 70-60% of the time it doesn't. So we can still pull back and close somewhere here. Remember, we still have the quarterly time frame, which can still make a pullback before we start to go down on good. So this monthly time frame, it just tapped into this. You can see we just tapped into that's low we rejected. So now we see what happened. We can just consolidate, make an inside bar before we shoot down next month. For the quarter, we can still spike above, okay, and then we start to move down. So if I can also bring this thing back, bring this back, it's not even that far from it. It's not even that far. But but I still have my overall short bias on gold. Okay, overall still short on gold. Yeah, I'm still short on gold, but we just keep tabs on the monthly time frame. We don't actually trade on the monthly or 3 month time frame. Just pointing at the overall direction, so I will know what to expect from the lower time frames. Now moving down into the weekly. So into the weekly, now you can see that this particular candle, this low we made here, that we've broken. We've retested that low once, we've tested that low twice. So this like 2 times now we've retested this low. Okay, we retested that low once, twice, and what else? What else can I suggest? Mm, Overall, we are still bearish. Why? Because you can see this moving average. We've broken this moving average. We've retested the moving average, and we're coming down. So we've broken this low. So we tested this once, we tested it twice. You might still be coming down. So don't be fooled by this 1 2 3, the 1 2 3 pattern here. Because you might say, okay, this 1 2 3, and we can start to move up now. Remember, at this point here, we had the same thing. So we have this 1 2 3 formation, and I actually thought that this candle was going to go up, but look at what happened. Now we have the same thing here again, and the bodies of this candle couldn't even close above this candle's high. Same thing that happened here. Bodies of this candle couldn't close. So it has an inside bar, and then we shifted the momentum. So here also we can still next week maybe tap into this high again and still shift in momentum. Okay, shift the momentum going lower. What else I would like to suggest here is this. So this candle, this is where the volume died here. And after this candle, you can see spike one, spike two, break below, break above, rejected, retested up, retested one, two, three, break back in. And now we are sitting at actually sitting at the midpoint of that candle. So now we are having two barriers. So depending on where the next weekly candle breaks, that's where the momentum is going to push price into. So if the next weekly candle break and close beneath these lows, if you break and close beneath these lows, you are going to see gold being pushed to the downside. Or if you can break and close above these highs, you are going to see gold being pushed to the upside. So you have to be careful. Let's not be tied into one bias. Okay, you have to be free. You have to be free flowing. Go with the wind. Okay. Okay. Also, what this moving average have already crossed over a long time ago, but we can still have a retracement. So if I can draw my feet from here to for here from here to here, this can still retrace. Maybe the moving average comes down in line. We can just retest that moving average, reject it, and then we can still start to come lower again. Okay, ride the wave, ride the wave, bro. Um, Let me delete this, delete that because if you have all those things on a daily time frame, monthly time frame, and sorry, 4 hour time frame, you can't even see shit. So I will leave this line here. I'll leave this line here because it will be a reference point going into the lower time frames. Okay, so daily, yeah. Why is it not showing? Come on, visibility daily, yeah. So daily, I don't actually look at this daily before looking at the 4 hour, but I'll be looking at it because this is a weekly analysis. So I actually look at the 4 hour first before looking at the daily because if you look at the daily first before the 4 hour, you can get confused. You can just be stuck in a particular bias and price can trap you big time. So I look at the 4 hour, get my bias, and then I look at the daily for like an extra confirmation. Okay, so we can see here what we have on the daily is we have a few barriers, bro. I have a few barriers here. Okay, we have barrier number one here, and we have barrier number two here. Okay, so these are the two daily barriers that we are actually consolidating within. So last week Thursday, we ran into these lows. Okay, ran into these lows, spiked below, closed a lot of. And what suggested that we are going long? I actually took a short position on Friday. I don't know. I don't know. I was not aligned. I was not focused, and I just took a short position, bro. And we got stopped us, and this bad boy rallied on NFP, and this was an easy buy. This was an easy buy setup. It was showing all over. So you can see this candle big. See this one small, bigger volume, bro. And we've rejected this area. So the next day, just buy with the confirmation from the 4 hour because I could see 4 hour breaking a few areas. It was just like stepping up, step. Okay, and then we had this day. So now we can see the few barriers we have. We spiked beneath this low, and this, and now we have this high where we have spike one, spike two, spike three, spike four, spike five. So five spikes above this area. So if you even drag it above, we have six, seven, eight spikes. This is 1926. Okay, 1926 proving to be a very difficult level. So now we are still staying beneath 1926. What I can suggest on Monday, I will not just go in there and throw in buys. I'm buying there. Okay, this looks like a buy. Let's buy because this candle kind of suggested that we are going to shift the momentum. Let's start buying. Okay, yeah, he suggested we are going to shift the momentum, but this candle here is stalling, bro. It's stalling. So now, what I can suggest is that we wait on Monday. We wait. Mondays can be a very good day to trade. We provide good setup. So possibly, what can possibly happen on Monday because of these five spikes already? we can actually spike above this area, close beneath, and then move lower. I hope this is showing on the 4 hour time frame because that would be okay. Yes, okay. So that would be a very interesting area to see what price does. You can spike above, close back below, and then we can start to scale in short on gold. But if you start closing above this area, retesting it on the 4 hour time frame and also the 1 hour time frame, then we can see gold coming into these highs. A closure be above this high 1 day, 2 days, bro, gold is going to fly. Where is it going to fly into? Who knows? I know. Okay, I know. We're going to come into this area. Going to come into this midpoint here. 1943. Okay, 1943. Keep that in mind. But if we don't, we are going to still come lower. Break this low 1907. Okay, you know, so you can still keep coming down, retest. Keep going. Just keep that in mind. Screenshot that if you want. Then 4 hour time frame. Okay, yes, nice. Nice. So I have this area now, the 4 hour time frame. So now we're having quite some areas of interest. Okay, here we have this high. This high is very important high. Well, we have stayed below that high, stay below that high all throughout the week. So this high can be very important for us. So and this is the high from the daily. So I'll be looking at the 4 hour London Open. So we give the 4 hour time frame to do its thing. End of day into new day opens. That's 17 o'clock, 5 o'clock New York time on today, and then we give it Asia section. So when I wake up in the morning, I want to see price, the reaction of price in this area, and also this area. If you can stay above this area will still beat the barrier. But then if you can reject and stay beneath this area, we are going to break down, coming into this area. If you can break down from this area, we're going to come into this area. And then we can see maybe 1896 again on gold, bro. It's simple. It's simple, but we just have to, bro. We just have to wait and see what's going on. What's going on in the 4 hour time frame? This 4 hour time frame is going to paint a clear picture. As you can see now, we spiked above this daily area one, spiked above it two, three. Okay, at the third one, we stayed above, and then price pushed it back immediately. So the next after this candle close is spiked above like three levels. Okay, two okay, yeah, three levels. One, two, three. Price brought itself back beneath two levels, and then the next four candlestick pushed it down below. So we are now three levels below. So what we can drive our attention into is how do we survive, how do we stay, how do we react around the remaining two levels which we are actually trapped into. I can see that we are trapped into two levels here. This area here and also this area where we're actually trapped beneath there. As you can see, this kind of spiked and stalled to the peep, bro, to the peep of this 4 hour area. This one spiked above, close below, and then this one close below here. Nice, nice. Bro, so what I'm expecting now is maybe if I see the same section we spiked here, close below again, and then we are coming into London. I'll be looking for shorts. Okay, I'm looking for shorts. So forget that we had okay on the monthly time frame we have short buyers on the 3 month time frame. When you come into this time frame, this forward time frame, you don't hold the bias. Like you don't hold the bias and say I'm going short, I'm going short, I'm going short. I'll be only looking for short. You go with the flow. Okay, you go with the flow. Ride the wave, ride the wave. So now, with that being said, the 1 hour is where we cap everything. I'm actually working on. I'm not actually subscribed to the Trading View Pro version, so I can have split screen and all that. So I actually want my 4 hour time frame to be clean. No, sorry, my 1 hour time frame to be clean So the 1 hour time frame should have its own analysis because this 1 hour time frame is very, very important. You need to see the importance of this 1 hour time frame in picking out the intraday price movements, pointing out direction where we should go. Okay, this 1 hour time frame is very, very important. You need to understand that. So I want to have my 1 hour chart. So I want to have it. I want to have it different. Different. So you see a blank chart, and then I can you copy and paste from time to time from the larger time frame to the 1 hour time frame. So if I can turn this back to the 4 hour time frame here, fix this up, and then I can hit here, press copy, come back here, and paste that over. Where is it? Ah, I need to delete all these lines. So if I can remove 19 drawings, okay, yes. Now come press paste. Now you can see we have this line from this area. We have this here now. So with the 1 hour time frame, what we can do just copy this that we've copied that already. We can also copy this one, copy, come back here, paste it, boom. So now we have these two areas to look at. This is where we do our if you're looking for entries, this is where we come. A clean chart, bro. Clean chart, everything clean. Look at this and you are aligned with your analysis and everything. Look at the time frame. Look at how price is reacting. How price reacting. Okay, is price suggesting that we should go long? Is it suggesting that we should go short? So this is where the magic is being done. So if you can get that on the 4 hour suggestion and then we come to the 1 hour here, we can just can slap one or two positions here, bro. Go short to this area. Simple. Simple. Don't ever come to the chart to trade when you're not aligned, bro. If you're not in charge, if you're not in charge, don't come to the chart to open to place trades. You're just like you're just wasting your time. You're just wasting your time. You can just take a trade and then you realize, I should have done this. I should have done that. I should have done this. I should have done that. So even if you look at it, you can see the hour level already been suggesting that that buys are coming. Okay, suggesting that buys are coming, but I wasn't aligned. I was looking for shorts here. Imagine that. I was looking for short, which why this was an easy buy, easy. I'm telling you, easy. And from this buy there, you can see where we came into pinpoint, pinpoint into this area. So that's it for now, bro. That's it for now, guys. Sorry for using the word, bro. That's it for now, guys. I'll be making videos into the week, little by little, and then after the week, I'll compile everything with my PNL for the end of the week, for the days I actually took trades. Because I won't be trading every day. I actually go to work, so I've said that already. So then, and I will do the weekend recap. So it's gonna be fun. It's gonna be fun. Let's see where we can go with this. Um, I'm actually looking to start a new YouTube channel. Start a YouTube channel, not a new one. I don't have one before. Start a YouTube channel, and we'll see where we grow the channel to. Okay, I'll only be bringing analysis. No day in life. Just analysis and trades. Okay, so that's that for today, guys. Hope to see you on the weekend. Yeah, and drive safe. Right. And take care. Peace.